Hey guys, Dave Keller here with Market Misbehavior. Today I'm going to present to you the world's most perfect head and shoulders topping pattern. So the head and shoulders pattern was really popularized in the Edwards and Magee book, really considered the Bible of technical analysis, called Technical Analysis of Stock Trends. Edwards and Magee really popularized this idea of price pattern analysis, looking at triangle patterns and flag patterns, and particularly head and shoulders tops and bottoms. They spent a lot of time in their book going through different examples and talking about how to analyze them, and really incorporating a lot of different techniques, looking at trend and momentum and volume in different ways to try to describe and categorize these patterns. When I'm looking at the chart of DuPont, today, I'm recognizing just a classic head and shoulders pattern. I feel like if Edwards and Magee were alive today, they would find this chart, and joy would come up in their minds as they saw the perfection in this pattern. Before I show the example and what it means for DuPont and other material stocks, if you like this thinking about technical analysis, market history, and investor psychology, go ahead and subscribe to my channel. Also, give the video a like if you appreciate it. We'd very much appreciate that back. Put a comment below, thumbs up or thumbs down for DuPont, and why. Let me know. Now here is the chart, and as you can see, if you've looked at a lot of charts and you're familiar with the head and shoulders pattern, you'll see why it's just such a classic topping pattern and literally a textbook pattern. I'm going to walk you through what the head and shoulders pattern looks like, why this is such a great example. So the head and shoulders pattern at the end of the day is a classic pattern, which is a high surrounded by two lower highs. And here's how you actually identify the pattern. You look for a high like that. We'll make it this big. You then find a high in the middle, and you find a lower peak. So it's a peak surrounded by two lower peaks. Here's the head, the left shoulder, and the right shoulder. Now, it almost, and if you look a little closer, you can see on a shorter term time frame, it's even a head and shoulders within a head and shoulders, right? The head actually has a high surrounded by two lower highs. But on this particular time frame, looking at the last 2 years here, really a clear head with a left and right shoulder. Now, just seeing that lower high, the right shoulder, is not enough. What you need is to find what's called the neckline, and that's this guy right in the middle. We can kind of draw it like this. So what we're doing here is connecting the swing lows, which are basically between the head, the left shoulder, and the right shoulder. You want to connect the lows between the left shoulder and the head, and then the low between the right shoulder and the head. You draw a trend line connecting those lows. That's called the neckline. So look at what happened, right? We rallied off of the low in the fourth quarter of last year, made a new swing high here in November, pulled back to around 60, 66, we'll call it, and rallied to make a new high around 78 in February. Then we make a lower high pretty even to the left shoulder. So the right and left shoulders are pretty even. That's one of the characteristics that makes this such a classic pattern. The neckline connecting the two interim lows is slightly sloping higher, which again is pretty much the classic pattern. Look how after the right shoulder we tested this neckline again, just once again confirming the importance of that line representing support. Now when we gap below there about a week and a half ago, it really drives home the fact that this was most likely a topping pattern. The break below the neckline is the trigger. That sort of initiates the sell signal, right? Completes this pattern and tells you that it is indeed a topping pattern. So another thing to mention is that the 50-day moving average certainly came into play. Look at how we rotated higher. As we traded higher, we stayed above the 50-day moving average. We tested it here in late February, and then after the head, we actually broke below the 50-day. Look how the right shoulder comes right up to the 50-day and then fails to get up. So again, that's another sort of trend following measure showing limited upside potential because rallies are hitting resistance and failing. So altogether, we have the head and shoulders top, classic layout with the head and the two shoulders. Using the moving average is a great way of just validating those patterns. The neckline sloping slightly to the upside, being tested again after the right shoulder, but finally breaking. Two other comments I would make on this pattern, maybe three. First off, another example would be the bearish momentum divergence. Look at how the price in November, in January, and February, each one of those times is met by lower momentum, right? So weaker momentum every time we make higher highs. Especially, it's sort of exaggerated here in the final peak there at the head in February. because there we definitely have a bearish divergence with momentum, right? Higher, it's overbought in January, not overbought in February. So the price is making new highs, but the momentum is actually not making new highs. So that lack of confirmation at this point really confirms that this is starting to be, potentially an upside exhaustion. The head and shoulders pattern now confirmed really shows you how that rotation has now completed and now going to the downside. On the right shoulder, you also noted the momentum remained fairly weak. So the RSI got very slightly above 50, but certainly not above 60, which is more characteristic of a bear market phase than a bull market phase. You'll also notice I don't include volume in here. Now, that was actually a key point of Edwards and Magee's methodologies to think about volume. They have very particular prescriptions about what volume should look like through the course of a head and shoulders pattern, particularly heavy volume on the breakdown. I don't use volume a ton in my analysis, and I've become very comfortable using head and shoulders patterns without thinking about volume. Now, some Edwards and Magee purists will tell you that is sacrilege to be ignoring volume in this sort of condition, but I found that volume to me means something very different in 2023 than it did in 1963, which is more 1950, 63, which is more when they were actually working and writing these books on price patterns. I think volume meant something very different in terms of institutional investors and directional bets. I think that environment is very different now. So I don't pay attention to volume as much, but you should know if you are looking at volume, that is part of your toolkit. Ideally, the ideal situation is that volume kind of slightly lightens here and then really accelerates, and the breakdown of the neckline should happen on heavier volume, because that should be sort of like an exclamation point on the breakdown. So that is the example of DuPont, ticker DD, which is a materials name, classic head and shoulders top. Literally, if you open the Edwards and Magee book, and I've got a link to that book in the description below, you will see examples that look a lot like this from 50, 60, 70 years ago, because this pattern has stood the test of time, right? Consistently comes back. A lot of other methodologies, to be honest, like Elliott Wave, like Dow theory, and others, basically have head and shoulders tops and bottoms baked into it. They might label them different ways, but at the end of the day, it's all about a market having a certain trend and then changing the lower high, breaking down of support, failing to eclipse resistance levels. That is a classic part of the technical toolkit, and I think the chart of DD is a perfect illustration of the benefits of that methodology. What do you think? Do you agree with the bearish assessment of DD? Yes or no? Let me know in the comments below and why. For Market Misbehavior, I'm Dave Keller. Be well, stay safe. Talk to you again soon.